The US car market is getting out of control, and unfortunately it's bankrupting a lot of people as a result. Now, we all know that things are going up in prices, house prices, car prices, food prices. The cost of living crisis is very much real, and it is hitting people who are owning cars as well. If you have it on finance, a lot of people are really struggling now in America. As of January in 2025, according to Fitch Ratings, 6.6% of subprime auto borrowers were at least 60 days, i.e. 2 months, past due on their car loans. This is the highest rate recorded since Fitch started collecting this data in the early 1990s, and things are not expected to get better anytime soon. The report says that the subprime segment of the auto loan market are facing a deteriorating outlook for the rest of 2025, and you can probably guess why. Those tariffs and the uncertainty around them will not be helping matters as they push the prices of cars up. But things are just going up in general. And the amount of money that people are in debt, because that's what this is effectively. You take out a loan on a car on finance, you're in debt. Just like a mortgage, just like a loan, anything like that. It is exactly the same, but it's just tied to an asset. In this case, tied to a vehicle. And collectively, homes in America, families in America own over 1.6 trillion, not billion, trillion dollars of auto loan debt. That is an absolutely that's just a ridiculous number. And that is according to the New York Federal Reserve. And it's so much so that it's actually more than the student loan debt. And that's saying something in itself as well, because we all know about the crisis around education when it comes to that. But that's the kind of worms that I'm not going to open right now in this video. Let's focus on the car loans. So how did it happen? How did this actually occur? Well, a lot of the foundations for this were laid during the pandemic. Supply chain disruptions and factory closures at the time created a strange dynamic that pushed car prices higher. In January 2022, 80% of new car buyers paid more than the manufacturer's suggested retail price, according to Edmunds. And used car prices were rising faster than new car prices as well, forcing people to take out even bigger loans for them as well in those circumstances. So essentially, people paid too much for their cars. They paid over what they should be worth. So now they are not worth as much because of the deteriorating value of cars in general as well, and that leaves them in a pretty difficult financial position if they are unable to keep up with the loan payments. And in fact, 1 in 5 vehicle trade-ins near the end of 2024 had a negative equity of $10,000 or more. Just think about that for a second. So what's going to happen? Well, unfortunately, it's not going to get any better anytime soon. Yes, the US has struck a trade deal with the UK to reduce auto tariffs from what would have been 27.5% down to 10%, but that is still 10% compared to 2.5% what it was before. And a lot of other countries are going to try and do these trade deals as well, but even if they are, it is not going to be as low as what the tariff value was before President Trump took charge. So unfortunately, it's not going to get any better anytime soon if things keep going the way they are. So expect that $1.6 trillion of car loan debt in the United States for families, not for businesses, just for families, to continue to rise. It's not going to get any better anytime soon. But yeah, guys, let us know what you think about this in the comments below. It seems like a crisis at the moment that is very much coming to a head, but I want to hear what you have to say about this in the comments below. Like, share, comment, subscribe as always, and have a great day wherever you are in the world today.